Hi guys, good evening to all. So welcome to business valuation classes. So I'm going to discuss. Actually, we have five topics, right? Five topics: fundamentals of business valuation, loss and compliances in business valuation, which is 5% weightage. That is not more important. So the most important topic in our business valuation is fifth topic, first priority, second priority, third priority. So these three are very important. I will discuss all these three topics thoroughly. Okay now. So in our previous exam, I mean last previous exam, okay. So majority of marks came from this last topic only, mergers and acquisitions. So that's why I'm going to start mergers and acquisition topic only. Initially, I'm going to start mergers and acquisition. I think very a lot of students have a doubt about this topic, and one more point is very simple topic. I can say that easily. Easily you can solve all the questions if you have a logic and formulas and all. I will make you perfect in this topic. Clear? Okay. So these are the topics in valuation in mergers and acquisitions. First one, acquisition pricing. Second one, acquisition outcome. Third one is financial modeling. Very simple topics: acquisition pricing, acquisition outcome, and financial modeling. Clear? So now my target is to complete the acquisition pricing topic. Very important. So questions will come from this topic only, majority. Majorly, first and second topics only, majorly questions will come in our exam. Okay now. So completely exam point of view, because we don't have a lot of time to discuss all the I mean unnecessary things, right? Okay, clear. Okay, ready? Let's start the topic. Simple. Acquisition pricing. First of all, what do you mean by acquisition? What do you mean by merger? First of all, we need to discuss about that basic thing. Okay, clear? Okay. Semi-final business valuation new syllabus. Okay. So complete material is not yet. I will give topic wise. Okay, now. So present till now it is under editing only. So I have a class notes. I will share all the notes. Don't worry about it, because this notes is very important. Because all examples and everything I have discussed in these notes only, I will share these notes for the time being. Okay, so once editing everything has got completed, the baby material will send the baby material, complete material. For the timing we will send topic wise. Okay, so our syllabus is going, actually my agenda is to complete each chapter one day. So I'm actually hopefully today, Saturday, Sunday. So most of the topics I'm going to complete. So we have, our agenda is to complete three topics, last three topics. First two topics is theory topics. We can manage easily. Okay, na? Is not much time will take to discuss that. So lot of time will take for these three topics only. Okay. Once we are done with it, we'll discuss that theory also. Don't worry about it. My target is, actually I want just 3 days. I want 3 days for BV, just 3 days. Give me 3 days. Okay, majority of the portion will get close. So most of the students asking about that SPM BV. Actually sir is not respond, that is not we cannot say like that. So sir also hopefully he will complete by Sunday, he said like that. Okay, don't worry, don't worry. Yes, I can understand your situation, because exams will be very near. I think within 1.5 month, 1 month mostly, correct, exactly 1 month. Okay, so don't worry about it. Okay, everything will get clear. Don't worry. Next, see, first of all we are going to discuss about this theory question, basic question, mergers. What is it, sir? Merger. Simple, sir. Merger are also known as amalgamation. Simply merger means joining. So two or more companies choose to merge into a single company is nothing but merger. Suppose example A Limited is a one company, B Limited is a one company. So they want to join together to form a new company, that is AB Limited. Okay, A Limited plus B Limited wants to join. So they form a AB Limited new company, single company. We can say it's a merger. Okay, and also amalgamation. We can also say that it's a amalgamation. Correct? Next, if the company is divided into two, nothing but one part of the business is separating. One part of the business is separating means nothing but it's a demerger. Demerger. Merger means joining. Demerger means separating. Clear? See, A Limited, B Limited. A Limited wants to acquire B Limited. A Limited wants to acquire B Limited. In this case, here acquirer is nothing but here A Limited is nothing but acquiring company. Here B Limited is nothing but acquiree. B Limited is nothing but acquiree. And also B Limited has to transfer all the assets and liabilities, right? So we can also call it as a transferor. Transferor is nothing but a B Limited here. Acquire is nothing but transferor. Acquirer is nothing but a transferee. Transferee. Please don't confuse about these two words because acquirer means a transfer. Some students may confuse about it. They will know about it, the concept, everything, but sometimes they may go in a wrong way. Slowly. Obviously, we will think our thinking will be like that only. Correct or not? Yes. Acquirer, transfer, acquire, transferee. So don't think like that. Acquirer means transferee. Acquiree means transferor because acquiree has to transfer all the assets and liabilities to transferee or acquirer. Correct? Yes. Clear? See, in a merger, the company being bought is absorbed into the other, so it ceases to exist as a separate entity once the merger is completed. Suppose example, A Limited wants to join with the B Limited or A Limited wants to acquire B Limited. Okay, so after merging, so B Limited cannot be run the everything as a separate company. It ceases to exist as a separate entity. Correct or not? It ceases to exist as a separate company because merger already done. So one company already acquired. So that's why that company is no more. Correct or not? Yes. So merger is of two types generally. Horizontal merger, second one is vertical merger. Horizontal merger, second one is vertical merger. Okay now. We have a conglomerate merger, concentric merger. Okay, we'll discuss about later. First of all, we are going to discuss about a horizontal merger. Horizontal merger means this is horizontal, this is vertical. Correct or not? This is vertical, this is horizontal. Horizontal means equal. Correct or not? Nothing but same companies. We are acquiring a same company, similar product company. Okay, I am the textile company. I want to acquire another textile company. Okay, now. So when merger is between two companies that are into the same products or same services, is nothing but a horizontal company. Example, Vodafone Idea. You already know about that. In 2017, Vodafone and Idea both got merged. Correct or not? So both are telecommunication only. Both are telecommunication only. Is that clear? VI plus Idea. What idea? VI. Now we call it as the VI, right? Yes or no? Previously Vodafone separate, Idea separate. Now VI. Vodafone Idea. Correct or not? Yes. This is the best example. Horizontal. Next, vertical merger means the companies are different points, completely different. My business is separate, other business is separate. I'm acquiring that other business company, other company. Are you getting my point? See here example, Walt Disney. Disney acquired Pixar Animation Studios for USD 7.4 million. Pixar was an innovation and automation studio and had talented people. Walt Disney was a mass media and entertainment. Disney. I think you know about Disney Hotstar, like. Okay, so one is animation studio, second one is a media and entertainment. So both are joined. We can call it as a horizontal merger. We can say it's a merger, but it is not a horizontal merger. It's a vertical merger. Both are different, sir. Correct or not? Say sir, no. Yes. Okay now. Everyone clear? Next, a vertical merger can be done between a supplier and a customer. This is also possible. See, suppose example, we have vertical mergers have two types actually. One is forward integration, second one is backward integration. Forward integration, backward integration. So, forward integration means we are acquiring the customer business. Sir, supplier is always back end, customer is always front end. So we are acquiring a customer business, it is nothing but a forward integration. If you are acquiring supplier, this is nothing but backward integration. Correct or not? See, if the acquirer moves up to the value chain towards the ultimate consumer, it is called forward integration. An ice cream manufacturer acquires restaurants where it can serve ice cream. Ice cream, actually I am the ice cream manufacturer. Okay, I will sell all the ice creams to the customers. Okay, actually I want some medium to sell more ice cream products, so that's why I want to acquire a restaurant. So because I will, actually I am the manufacturer, I will give on wholesale basis. Correct or not? Wholesale basis to all restaurants, all the shops and etc. So now I want to acquire that restaurant itself, which means he is customer to me. That restaurant owner is the customer to me, restaurant company or whatever maybe, it's a customer to me. I am acquiring that restaurant. So that is forward to me, not backward. Correct or not? Because I am only the manufacturer. No one is behind me. Correct or not? Only in front I have customer, that is restaurant company or restaurant. So I want to acquire that restaurant. This is the forward integration. Are you getting my point? Everyone? Clear or not? Suppose example, for preparing ice cream, I want milk and all the ingredients, raw materials, etc. Correct or not? Now, if I want to acquire that milk producing or milk providing supplier or raw material supplier, okay, if I want to acquire that supplier, this is backward integration. I am going back. Okay, if I acquire a restaurant, this is a forward integration. If I acquire that milk providing supplier, whatever maybe, this is backward integration. Are you getting my point? Clear? I think everyone got a full clarity about this backward and forward integration. Is it clear? See example of the ice cream manufacturer acquires dairy from the dairy farm. Actually, I'm acquiring the dairy farm to have better access to milk. Yes, when I acquire that dairy farm, I have a lot of quality. Everything is available with me only. Milk, everything. Because without milk, we can't produce that ice cream, right? Correct or not? Yes, sir. Yes. Okay. I already tried once, but it not becomes ice cream. It's something else actually. Okay. Clear. So this is forward and backward integration. Is it clear? This is the part of vertical merger. Next, conglomerate merger. A conglomerate merger or a diagonal merger is one where the merging companies are neither into the same products or services nor in the same business. It may be the part of the diversification strategy of the company. Conglomerate means completely different. Yes, completely different. it's like a expansion. Diversification means I want to expand the business, not with the same product or same business. I want to go some other product. Suppose example, initially Tata starts with the suppose example. Actually, suppose example, if I started a company with a steel something, and later I went to software, and later I went to textiles, and later I went to that I mean shampoo something etc. So slowly I'm expanding the business with different business criteria, correct or not? Different businesses, completely different. So this is nothing but the part of the diversification strategy, expansion, nothing but my company I want to diversify. Diversify means different, sir, completely different here. Expand the, I'm expanding the business. So we can call it as a conglomerate. Conglomerate. Say conglomerate diagonal, which is one where the merging companies are. So I want to merge with that company. Neither into the same product or services, nor in the same business. It may be part of the diversification strategy. Completely different businesses. Correct or not? Yes or no? Yes. This is nothing but merger. Actually, this lot of a discussion is not required. I think so because everyone knows about this basic merger acquisition. Everything we want how to do solve, how to do problems, how to solve the problem. That's what we want. Okay, now. Okay, I can't say directly that problems, right? So that's why I'm discussing. Otherwise, I no need to discuss this bloody theory. I think you only can if you study this also you can easily understand. Correct or not? This is the basic English I have used here. Correct or not? Sentence is also very simple, right? Okay, now clear. Next, come to acquisition. Come to acquisition. Is it clear? So when both acquiring and acquired companies still exist as a separate entities at the end of the transaction, the company making the purchase is known as acquiring company or acquirer. The company that is bought is known as target company. Yes. A limited, B limited, A limited acquired B limited. This is nothing but acquirer or acquiring company. B limited is nothing but target company or acquiree. What's the name? Target company, acquirer company. Target company, acquired company. Acquirer is nothing but acquiring company. Acquiree is nothing but target company. So these are the words we are using in this topic. So we are targeting that company and purchased that and acquired that. That's it. Clear? Clear, everyone? Yes, simple. In 2008, Walmart acquired 77% stake in Flipkart India for USD 16 millions. In 2013, Facebook acquired the WhatsApp. Elon Musk, okay, 19 millions. Clear? There's just basic examples I have given here. The company which is being acquired is known as target or acquired company, and the company buys the other company is nothing but acquirer. Okay, acquiring company is different, acquired company is different. Please don't get confused in wording. See, again I am telling this point. A limited acquired means acquirer or acquiring company or acquirer company. B limited is nothing but acquiree, acquired company or target company or transferor company, transferee company. So that's it. Please note this. Don't get confused. That's it. Acquiring company means acquirer. Acquired company means because it is acquired by someone. That's why it is nothing but a acquiree. Don't get confused here. Clear? Okay, now. Next, we have there are various motives for external restructuring. External restructuring. I think CFR students may know about very well about this external restructuring. Correct or not? Simply form a new company, acquiring a new company. See, what is the motive? Growth. First, our motive is growth, sir. Obviously, if you want to acquire, the main motive is to get expand the business, to get the growth. Correct or not? Yes or no? Just for getting growth purpose. Creation of synergy. Synergy means generally 1 plus 1 more than 2. Generally equal to 2 only. Synergy benefit means it is more than 2. Correct or not? 1 plus 1. Generally 1 plus 1 equal to 2 only, but when we are acquiring, we must have that synergy benefit. Benefit must be there. That's why we can call it as a 1 plus 1 more than 2. We are getting the benefit more than what we have incurred for that project or company. See, when the value of the combined entity, must be exceeds the value of simple sum of its parts. Suppose A part, B part, they form AB. If you add this A plus B, this combined value must be more than this. Is it clear? Clear? Next, increasing market power. Obviously, market power has to be increased. Pricing power. Okay, now. Being an acquiring company has increased its pricing power. Must be increase the pricing power in an industry. Okay, now correct or not? Must. That's the main intention, sir. Correct or not? So vertical integration may give the acquirer greater market power if it allows the acquirer to gain control of the critical production input by merging with the dominant supplier. So, but in case of a vertical integration, it may be possible because in case of vertical integration means we are acquiring a different, not a similar company, right? Similar product company or similar business company or similar product line company. We are acquiring a different company. Definitely, in that case, we may have some pricing power because we may acquire that supplier also, back end company or a front end company, backward or forward also possible, right? In case of a vertical, so that's why it's possible acquiring unique capabilities and resources. Obviously, we need to be what's that, sir? Very innovative, sir. We need to develop our capabilities internally, like by doing R&D, research and development. We must have research and development capabilities. We need to do effective marketing, and we must have a lot of talent to do everything. So once we acquired, that is not enough, sir. We do a lot of things. Okay, now so that should be there if you want to get successful, right? Next, diversification means mergers and acquisition active to diversify business. Yes, simply expansion with some other businesses, some other companies. Simply diversification. So these are all the points. Nothing but motives are we can call it as a merits also. Merits also. Advantages, whatever. Maybe you can write all these things. Clear? Clear. So come to topic. Next. So come to acquisition pricing. Simple. A limit is the company. B limit is the company. Is the acquirer is the acquiree. Is the target company is the acquirer company. Yes. When we are acquiring, we need to pay consideration, right? We need to pay consideration. It may be in cash or other securities also. It may be shares or debentures, whatever may be. Correct? So generally, we need to offer higher price than market price prior to acquisition. We need to offer them. Nothing but A Limited need to offer higher price than the market price prior to acquisition. Before acquisition, suppose example market price is 100 rupees, we need to offer more than that. Then they will accept. Otherwise, they will not accept. Correct or not? Yes. Correct or not? So, suppose example, the price is market price is 100. We are offering 120. The 20 rupees is nothing but extra. That is nothing but acquisition premium. Everyone. Slowly I will inject all the keywords from this topic, acquisition premium, because we are acquiring, okay, we are acquiring at a premium, we are paying extra amount, that is nothing but premium. So acquisition price minus market price. Clear? Yes, sir. Under accounting perspective, we can call it as the goodwill. Under corporate financial perspective, we can call it as a synergy benefit or synergy effect. Yes, accounting perspective, we can say it's a goodwill only, but under corporate financial perspective, it's a synergy. Okay, we are talking about this synergy, right? Everyone, everyone have a clarity about it. Clear? So here, if you want to acquire that company, we need to find out the market price of the company, of that company. Correct or not? Yes. So we can call it as the intrinsic value of a target company. We need to find out the intrinsic value. Also, we need to find out the intrinsic value of a target company. We have a three approaches actually: market, cost, and income approach. Okay, what is it? Market approach, cost approach, and income approach. Clear? Are you getting my point? So we have a lot of approaches. Don't worry for intrinsic value. So that is not the main thing. That's the main thing only. Okay, we'll discuss about it later. First of all, you need to keep in all the things here: acquirer, acquiring, acquirer company, target company. Pay consideration. It may be in cash or securities. We are paying some amount, something. We are acquiring a particular price. That is nothing but acquisition price. Okay. So market price is 100, acquisition price is 120. The difference 20 is nothing but acquisition premium. Okay. If you have clarity about this, that's okay for me. Clear? Okay. Clear? Next, synergy, value creation. Synergy means obviously value creation. So 1 plus 1 is more than 2. So the value of individual companies must be less than the combined entities value. Correct or not? Nothing but the combined entities value is more than the individual entities. Correct or not? Yes, that is nothing but synergy. Clear? So acquisitions create a value when cash flows of combined companies are greater than some of their individual values. Yes, whatever we have discussed, that's only. Clear or not? Yes, that's it. That's the synergy value. Okay. Now I'm going to discuss about a small example to introduce all the wordings, small wordings like market price per share, okay, in earnings price per share, market capitalization, okay, all the words I will introduce. Don't worry, I think you may have some idea about this topic in your SFM, right? But if you are writing a group 4 only, you don't have a logic, you don't have any idea about this topic. If you are only group 4, okay, so no need to worry, don't worry. If you are writing any group, you don't have any coaching of SFM also, you will understand much better, sure. Okay, see, simple, sir. See, A Limited wants to acquire a B Limited. A Limited wants to acquire B Limited. A Limited need to pay purchase consideration to existing shareholders of B Limited. Yes, A Limited need to pay purchase consideration. Correct or not? Yes. So they have given the EPS, MPS, all the values. See, value of A Limited before acquisition is 2000. Something all rupees in lakhs, assume that. Value means here market value. Okay, now I'm talking about the market value of A Limited before acquisition is 2000 lakhs. Okay, ignore about lakhs, simply 2000. Value of a B Limited before acquisition is 1000. Value of a B Limited before acquisition is 1000, right? Okay, nice. Due to synergy effect, earnings of the post merger entity will be increased by 50 lakhs per annum. So synergy value also given, that is 50. No need to calculate that synergy. The synergy value also given, that is 50 lakhs per annum. Every year 50 lakhs is the synergy benefit to the entity. Earnings of the post merger entity will be increased by 50 lakhs every year. expected rate of return is 10%. Expected rate of return is 10%. Okay now? Clear? So by using this, see, what is the synergy benefit here? Value of a synergy benefit is how much here? Simply every year that is a 50 lakhs. Correct or not? Yes or no? So we are getting the return of rupees 10%. Return how much? Expected return is 10%. So simply we can find out the value of synergy benefit. What's the value? Anybody? Sir, I think cost of equity equal to dividend by P naught. Or in case of a cash flows, the formula is K equal to cash flows by P naught. P naught means price, market price. K means rate, cost of equity, cash flows. So I want price. So PO equal to cash flows by KE. Cash flows how much? 50 lakhs divided by 10%. So we got a value. What's the value? 500 lakhs. That's it. I hope everyone knows about that topic. That's the formula. Cash flows by K. Here written here simply. So 500 lakhs. That is the synergy benefit value. Okay. Clear. Total value is 500 lakhs. So if the cash paid by A Limited to B Limited is 1200 lakhs. If the cash paid by 1200 A Limited to B Limited is 1200 lakhs. Okay now. So simple, sir. What is the value of post-merger entity? That is the question actually. What is the question here? Post-merger entity, what is the value? Value means we need to add both everything, right? Nothing but we need to add before acquisition value of A Limited, before acquisition value of B Limited. Okay, and also synergy value we need to add because that is also the value after merger. That is also exist, right? So synergy value also need to be added. Correct or not? Yes or no? Nothing but you need to add pre-acquisition value of A Limited, pre-acquisition value of B Limited, next synergy value. Total how much? 2000 plus 1000 plus 500. Total 3500. But here you are paying cash. How much? 1200 lakhs. Nothing but it is going out. Correct or not? So the value gets decreased by 1200 also. So we need to be minus the 1200. So 2000 plus 1000 plus 500 minus 1200. 2300 is the value of post-merger entity. So by using that we can say the formula value of A Limited before acquisition plus value of B Limited before acquisition plus synergy value minus cash paid as purchase consideration. This is the value, combined entity. Value of a post-merger entity means combined entity value. Is it clear? Everyone getting clarity or not? Yes. Clear? Any doubts? Big simple, sir. I want after merger. After merger means we need to add previous value of both the companies. So that's why both company A, company B. We are acquiring, right? So our value plus this company value plus synergy, extra benefit will be added, right? That is also the benefit to value. That is also the value after entity, after merging. So synergy value minus cash pay. We got this answer. Please remind this. I'm saying this example. This will be useful when we are solving problems. That's why. Are you getting my point? This is the formula is there also. Material. So simply I simplified this simply. Okay now. So anybody please say here what is the benefit to the B Limited? What is the benefit to the B Limited shareholders here? What is the value of B Limited? 1000. A Limited paying how much here? 1200. Which means benefit how much? 200 or not? Yes. Yes. Nothing but purchase consideration minus market value of B Limited before acquisition. Before acquisition, the value is 1000 only, but they are paying 1200. 200 is benefit to the B Limited. Yes. Yes. B Limited shareholders. Next, what is the benefit to the A limited shareholders? After merger, the value how much? Post merger, the value is 2300. But pre-merger the value is 2000 only. That is nothing but they got 300 benefit or not? Yes. Yes. That 300 is the benefit to the A limited shareholders. What is the formula? Value after merger minus value before merger. Value after merger minus value before merger. Okay, now value after merger minus value before merger. So another formula for benefit to A limited shareholders is nothing but synergy value minus acquisition premium. What is the synergy value here? Total synergy value 500. Correct or not? Total synergy value 500. What is acquisition premium? Acquisition premium means what is the acquisition premium? Anybody? Please tell me. We are paying 1200. The value is 1000 only. The 200 is the acquisition premium, right? Yes. So that is nothing but balance 300 is only the benefit to A limited shareholders. Correct or not? Anybody say yes or no? Yes. So benefit to B limited shareholders is nothing but what is this? Acquisition premium. Correct or not? Okay. Don't worry. Don't get confused. I will give clarity. Don't get confused. That is only the value. Okay. Don't get confused. Simply, please, in a simple language, what is the benefit to B limited shareholders here? 200 lakhs. What is the benefit to A limited shareholders here? 300. That's it. Clear or not? Everyone? Yes. See, another formula for what is that benefit to A limited shareholders is nothing but synergy value minus acquisition premium. That is nothing but we can also call it as the acquirer's gain. This is the gain. Actual gain. What is the gain here? Acquirer's gain is nothing but what is the formula? Synergy value minus acquisition premium. Slowly, I'm introducing the new names actually. Acquisition premium. You already know about that acquisition premium. What is the acquisition premium here? Acquisition price minus market price of a target company. Paying 1200. The value is 1000. The 200 is nothing but acquisition premium. I already discussed about this. That is nothing but benefit to B limited shareholders. Target company shareholders. That is nothing but a premium to acquirer. So that's acquisition premium. We need to pay that extra amount 200. But actually we are getting synergy effect is how much? 500. The difference 300 is nothing but acquirer's gain. Acquirer's premium different, acquirer's gain also different. Don't get confused. Okay na. Acquirer's premium, acquirer's gain. Everyone have a clarity about this or not? Please tell me. Clear? This is nothing but acquirer's gain. Okay now? Clear or not? Yeah. Yes. See, MPS means market price per share. EPS means earnings price per share. PE ratio means price earnings ratio. What's the meaning of PE ratio? Anybody? What's the meaning of it? Please tell me. Okay now. Tell me. PE ratio means price earnings ratio. This is market price. This is earnings. Suppose example 2 rupees. If you want to get 2 rupees earnings, you need to invest 10 rupees. That's it. That is the price earnings ratio. PE multiples. We can also call it as PE multiple. E is how much? 5. 5 times. PE multiple. We can also call it as a PE multiple or PE ratio. How much? 5 times we can say that. For not 5 units, not 5 rupees. It's a 5 times. PE ratio. Okay now. Here EPS earnings per share means per share rupee only. Per share value. How much? 10 rupees, 20 rupees, like that we will say. But in PE ratio, it is 5 times actually. Okay. MPS by EPS. Market price per share by earnings per share. Is it clear? If you want to get a 2 rupees of earnings, you need to invest a 10 rupees for that earning. Okay, now for that 2 rupees earnings, you need to invest, you need to incur 10 rupees. Then only you will get that 2 rupees. Correct or not? So here, this is nothing but PE ratio. Is it clear, sir? What is the formula for PE ratio? MPS by EPS. MPS by EPS. Okay, MPS by EPS. Clear? Next, MPS means market price per share, nothing but market capitalization by number of shares. Again, market capitalization means market value into per share value, market price per share. Sorry, number of shares into market price per share. That is nothing but market capitalization. Simple cross multiplication. Market price per share into number of shares. We will get market capitalization. EPS means earnings available to equity shareholders by number of equity shares. You already know about it. Clear? I want to stop this first session for to this. Okay, I want to continue in next session. Okay, immediately only. No delay. Don't worry about it. So whatever we have discussed, I will repeat because I want a clarity about this topic. Okay, clear? Okay, now I will make the subject very simple, sir. If you listen the classes CFR, everyone will say that. I mean, you will say like that only. Yes, within that small span of time, no one can complete all the topics. Okay, actually, I did not leave even one topic also. Yes, every topic, every question I will discuss already. Clear? Okay. Don't worry, sir, guys. Next, yes, see, acquirer, transferee, acquiree, target company. Correct or not? Next, acquisition premium, acquirer's gain. Acquirer's gain is nothing but benefit to acquirer company. Correct. Acquisition premium is nothing but benefit to target company. Correct or not? Yes. Synergy benefit means combined entity value is more than the individual values. Sum of individual values. Correct or not? Yes. P ratio, MPS by EPS. EPS equal to earnings available to equity shareholders by number of equity shares. Market capitalization means number of shares into MPS. P ratio equal to MPS by EPS. Clear? So we have discussed about up to this point and definition of a merger, horizontal merger, vertical merger, conglomerate merger, and acquisition. We are discussing some examples also, and merits of acquisition. Simply, external restructure is nothing but merging or acquisition, whatever may be. So we have discussed about this till now. Okay, we will discuss the remaining things in next session, right? Okay guys, we are done up to market capitalization, right? Next come to the formula for acquisition premium. So the question may ask from this topic. Okay, so calculate acquisition premium. Simple, sir. How to calculate? First of all, acquisition premium. How to calculate, sir? It should be calculated based on recent comparable transactions. Acquisition premium should be calculated based on recent comparable transactions. Comparable means maybe with other company information, similar company information. Okay, now. So next, what is the formula here? Deal price minus pre-merger price of a target. Target company means acquiring company. So acquiring company before merger, what is the market value? That's we need to subtract from the deal price. Deal price minus pre-merger price of the market divided by pre-merger price of a target. Then we will get acquisition premium. Are you getting my point? Into 100%. Into 100 will be the common percentage we are calculating. So can you please tell me deal price minus pre-merger price of a target? That's it. For amount, that's it. For a percentage divided by pre-merger price of a target. Pre-merger, I'm talking about a pre-merger. Everyone have a clarity? So acquisition premium equal to deal price minus pre-merger price of a target divided by pre-merger price of a target. That's it. Simple. For acquisition premium price calculation, what is the formula? Deal price minus pre-merger price of the target into number of shares of target company. This is for one share. This is for total shares. Acquisition premium price, if the question is asking about a price, so this is the formula: deal price minus pre-merger price of the target into number of shares, or consideration paid minus pre-merger value of the target. Because we are paying, suppose example, we are paying 1 lakh, the value of the pre-merger value of a target is 80,000 only. We are paying 20,000 extra. That is nothing but a premium. We are paying a extra amount. We are paying extra amount. That is nothing but premium. Simple. We are paying extra amount. The value is 1 lakh only. We are paying 1 lakh 20. That is 20,000 is known as a acquisition premium price. That's it. Easy to remember. Then what is the deal price? Anybody? Deal price. What is the formula? Intrinsic price plus rate of acquisition premium. Intrinsic price plus rate of acquisition premium. Intrinsic value, intrinsic price plus rate of acquisition premium. Rate means 10%, 20% we will add to the intrinsic price. Then we will get a deal price. We have one example also, we'll discuss there. So see here, that is only the example, I think so. See here. Intrinsic price means simply market price per share, nothing, no issue. See here, given EPS of M Limited is 15 rupees. PE means price earnings ratio 16. Intrinsic price, the market price per share, how much? How much here? 15 into 16, 240. So I think we know the formula. PE ratio equal to MPS by EPS. We have MPS and EPS. Sorry, we have PE and EPS. We have PE 16, MPS 15. 15 into 16, how much? 240. That is nothing but MPS. That is nothing but intrinsic value. Correct or not? Yes. The simple calculation. If a PE not given for company, directly use comparable method for other companies. If the PE is not given, so you need to calculate by using the comparable method of other companies. Okay, now we will take other companies PE. Based on that, we will calculate. We will take the average PE ratio. Suppose example, if we have 2 companies, we will take the average of 2 companies. If we have 3 companies, we will take the average of 3 companies. We will have 4 companies, we will take the average of a PE of 4 companies. For calculating PE, we want MPS and EPS, right? MPS and EPS. So here MPS 240, first case. MPS 150, third case 300. EPS given. So we can calculate easily PE. MPS by EPS. MPS by EPS. MPS by EPS. We will get this value. I want my company PE. So how to calculate? Need to calculate average PE ratio. We need to calculate average of these 3. We will get the PE ratio of our company. That's it. I'm again saying that if you don't have a PE directly, okay, you can calculate by using the comparable method of other companies. That's it. This is the calculation. We need to consider the average of the PE of all the companies. So we have a PE right now. Next we have EPS right now. 15 to 16, how much? 240. That is the market price. Clear? This is 2 examples actually, not 1 example. It is 2 examples. Different ways. If the P directly given, you can calculate directly. If the P is not directly given, if the other company's value is given, you can calculate the P of other companies and take the average. You will get the P of our company. That's it. Next, rate of acquisition premium 25%. Deal price equal to. Here market price how much? 240, right? 240. That's nothing but intrinsic price. So how to get deal price? Intrinsic price plus rate. Intrinsic price how much? 240. Rate how much? 25%. 240 plus 25%. Please enter in your calculation. 240 plus 25%. How much? 300. 240 plus 25% of 240. Correct or not? Yes. We will get the 300. That's it. So we have discussed about PE calculation. If the directly given, if the value is MPS and EPS of the company directly given, you can calculate directly. Otherwise, using the comparable method. Based on that, we will calculate the, based on the market price, we can calculate the, what is that, deal price, intrinsic value plus rate of acquisition premium. That's it. Clear? Wait, I will open the questions. So, okay, see here, this is our question bank for last topic. I mean, mergers and acquisition. See, these are the three topics: acquisition pricing, acquisition outcome, and financial modeling. We are going to close this topic just today only. Don't worry. Okay. See, yeah, question number one. It's for homework for you because simple. I already discussed on example based on this question. So you need to solve this. Yes, you need to solve this. I am going to discuss question number two because we have a, see, Arun has been assigned the task of estimating a fair acquisition price for a money limited. She decides to use a comparable company analysis to determine a fair acquisition price and gather following information regarding three companies. So they gave a market price and EPS also. We can find out the PE and then take average of the PE. She also gather recent acquisition companies like market price and deal price. The expected EPS is 15. So the question is asking about expected deal price. Calculate expected deal price. So first we need to calculate the intrinsic value. We have a what is that, EPS. We want a P. For P, what do you want actually? MPS and EPS. We have already EPS. We want MPS. MPS how to calculate? Based on the given information. Yeah, I think I discussed the same question. I think so. Just wait for the values. Just check all the values. Yes, only these values I have taken for PE calculation, right? Yes, correct. For market price. So this is the question. No. Yeah, simple question actually. So easily we can calculate the P from this value. We have a PE and we have a EPS. We will get a MPS, market price per share. Easily we can calculate. And then we need to find out the deal price. Deal price means formula intrinsic value plus acquisition premium, rate of acquisition premium. Correct or not? So how to find out this acquisition premium? How to find out this? First of all, what's the deal price? Please remember, sir, what is the deal price? Intrinsic price plus rate of acquisition premium. Correct or not? Yes or no? Next, what is the acquisition premium formula actually? How to find out this acquisition premium? Simply deal price minus pre-merger price of a target company market price simply. So if you see the question, so we have different companies P, Q and R. These three have a market prices, correct or not? These three have a market prices. Correct or not? Yes. You take a call, see. Deal price minus pre-merger price of the target. So here, deal price how much? 117 minus 92.45. That is the pre-merger target price. Pre-merger market value. Correct or not? Yes. Divided by pre-merger value how much? 92.45 into 100. Please calculate fast. Everyone, I will also take calculate. 117 minus 92 92.45 divided by 92.45 26.55. Correct? Second, same. Please calculate. 357 minus 357.5 minus, sorry, deal price 425 minus 357.5 divided by 357.5. How much? 18.8. Huh? Correct or not? Please tell me. Correct? Yes, 18.88. Nothing but 18.9. Third case, please calculate 290 minus 224 by 224. How much? 29.5%. Please take the average of it. How much? Almost 25%. So please take the average of all the acquisition prices. You will get the, what is that? Acquisition premium. Acquisition premium. How much? 25%. What is the intrinsic value here? So EPS 15. P how much? We already calculated in our example. P how much? Same amounts, sir. Same amounts I have taken. So P how much? 16. So total market price 240. So 240 plus 25%. How much? 240 plus 25%. How much? How much, sir? 240 plus 25%. Take calci. 240 plus 25%. How much? 300. So yes, 300 is the deal price. Sir, here see, if you see the question, simple, very simple. The first, simply the question is asking about the deal price. How to get deal price? Deal price equal to intrinsic price plus acquisition premium. So we know intrinsic price, nothing but market price of a target company. How much? So we have a EPS value given directly 15. So by using these two values, we can find out the PE and then take the average of the three companies PE. We will get PE also. By using these two, we will get market price. Yes, intrinsic value we got already. We want acquisition premium. How to get that? Deal price minus acquisition. Sorry, deal price minus pre-acquisition price of a pre-market price of a target. Pre-market price means this one only. This is not after merger, pre-merger, pre-acquisition only. So given how much these values. So by using these two, you can easily calculate the acquisition premium and then take the average of the three companies acquisition premium. It should be added to the intrinsic value. You will get a, what is that? Deal price. Correct? Correct or not? Yes. Everybody have a clarity about this? Simple steps, sir. First step number 1. Presentation, no issue. This is only the step number 1 to calculate the intrinsic price. This is the step number 1 for first question. Step number 2. Calculate answer. What is that? Acquisition premium of all the companies, and then take the acquisition premium of our company. Take average of it. That is step number 2, and then finally calculate the deal price formula. Simply you can calculate. That's it. So answer already given. So 300. This is the 300. This is the question number 1. Come to question number 2. Simple. Jasmine have assigned to evaluate the acquisition price of HBR Limited. The information of HBR is given below. Price per share 11. Shares in million, 50 million shares. Debt 500, revenue 700, EBITDA DTA 125, EPS 0.9. You ask me assess some recent comparable transactions. Acquirer A, target B, BQCR, DSED. These are the acquirers, these are the target companies, acquiring companies. Target means acquiring companies. Equity given, equity given. Enterprise value, EV means enterprise value given. EV by LTM sales, how much? So all the ratios given. EV by LTM, sorry, EV by LTM, EBA DTA given. Equity by LTM PE, PE also given. Okay, you are required to assess the acquisition price and its premium against the current market price. Okay, so simply we can say it's a last 12 months EBA LTM. Okay, now last 12 months. You are required to assess the acquisition price. Acquisition price. Next, and its premium also. Acquisition premium, acquisition price. We have a formulas. Against the current market price using average values. Okay, now analyzing. Okay, see here. First of all, if you see the question, what do you want? That's it. First of all, you need to find out. Acquisition price. What is the formula for acquisition price? Deal price minus pre-merger profit. Sorry, pre-merger target price into number of years, or consideration paid minus pre-merger value of target. Consideration paid minus pre-merger value of target. Correct or not? Yes. Clear? Come to question number 2. So please take the heading. Headings are calculation of acquisition price and acquisition premium. Please take the calc. Everyone. Everyone, sir, please take a heading. Okay. Come to question. So in the given question, we have a enterprise value by sales ratio. How much? 1 plus 1.7, 2. So they have given different companies regarding different companies. So now I want generally the question is asking about take average values. So I need to take average value. Please take the average value, everyone. Please calculate the average. Please calculate average. 1 plus 1.17. Next 2.2. Everyone, please. But don't waste time, sir. 1.1 plus 1.7 plus 2.2. So we need to complete very early, right? So 8.3 divided by 5. How much? 1.66, correct? Yes, this is the average. EB by S. Next, EB by EB data. Same, do like that. Average value. Next, last one also same. 17 plus 15 plus 20 plus 14 plus 22 divided by 5. 17.6, correct? Yes. This is the industry average. Overall industry average value I have taken. The question is also saying that only, because we cannot use a particular company's ratio average, correct or not? Yes. Next, given So our company name, what is it? Asmin. Sorry, HBR Limited is our company. Our company. Our company debt 500, shares 50, EPS how much? 0.9, EBA DTA 12.5, revenue 700. Correct? Yes or no? So take the first of all, ultimately what I want right now. Anybody please? Anybody understood that? We need to calculate ultimately acquisition price and its premium. For that, we need to calculate market price also. First of all, market price is very important for the company. So we are going to calculate that only. So in the given question, we have a EPS given how much? EPS 0.9. It will be useful by calculating by using a PE ratio, MPS by EPS. Correct or not? So we have already given average PE. Okay, average P how much? 17.6. So take the EPS value 0.9. Next in the given question we have a EBA DTA. EBA DTA where we use it that? Here. EV by EBA DTA given right? EV by EBA DTA. So take the EBA DTA how much? 125. Correct or not? So EBA DTA 125. Next sales. EV by sales means nothing but sales how much revenue? 700. Take 700. Take 700 sales. Just I have substituting the values given in the question. First EPS for the last column, EBIDT for the second column, sales for the first column. Now you can calculate the what is that enterprise value. Anybody how to calculate the enterprise value? How to calculate, sir? By multiplying with the industry average. Yes, it is by multiplying with industry average, you will get a what is that, sir? Enterprise value. See here, 700 into 1.166. Next, 125 into 11. How much? 1375. 1375. Then you will get a enterprise value. For first two cases only we can calculate the enterprise value, but for the third one we cannot calculate. Directly we will get a market price. Simply industry average P, that is nothing but P into EPS. We will get a market price directly. How much? 17.6 into 0.9. 15.84 is the market price. Value per share, correct or not? Yes or no? Tell me, sir. Come to here. Enterprise value. This is the total value. If we have any preferentials, we need to reduce. If we have any debt, we need to reduce. Then we will get a equity value. I want equity value only. Correct or not? I am talking about market value of equity share only, not preferential, not and all. So that's why enterprise value means preference shares. In the given question, is there any preference share capital? Preference share is not there, but we have a debt how much? Debt how much? 500. So take the debt 500. So minus we will get equity value 662, 875. Number of shares in the given question 50. So divided by 50. We got 13.24, 17.5 here, 15.84. Okay now. Correct or not? Yes or no? This is the value. Next, premium calculation. I think everyone knows about it. How to calculate, sir? This is the premature market price. This is the premature market price. How much price per share? 11 rupees. Correct or not? Yes. By using that easily you can calculate the acquisition premium. Simply here we can say the value of a share is nothing but here we can assume that it's a deal price. How to get deal price? Market price plus the premium actually. So we are going to calculate the premium only, right? Correct or not? Yes or no? Yes. So that's why I'm taking a see here. This 11 is the pre-merger. What is that? This 11 is the, what is that? Just wait. Okay, are you getting my point? Is there any difficulty to understand here? Nothing difficult, sir. First of all, I am going to repeat this question again. Simple. Please pay attention. Okay. So you want to calculate the acquisition price and the premium. Clear? So we have a different items given, that is different points, EV by sales, EV by EBITDA. Okay. Next, what is it, sir? Equity by PE ratio. Correct? Yes. By using this, EV by sales equal to, actually we have industry average how much? 1.66. Correct or not? EV by sales equal to 1.6. We have sales how much? 700. Then we will get enterprise value. Correct or not? It will go to this side. You will get this. Here also same. You will get enterprise value because EBITDA given already. Here also we will get, what is that here? Equity, nothing but. Correct or not? So we want actually P. Correct or not? Yes or no? Equity by PE ratio. How much is given average? How do we get that? Simply by taking the average. Correct or not? Simply by taking the average of it. Okay, no issue. EP is already given for that. So directly we can calculate the market price here by using that. But in case of these two values, okay, I think students may got one doubt here. Sir, equity by PE ratio equal to 17.6. Correct or not? So here, what is the equity actually? So like the question may come for the students. Correct or not? Yes or no? Yes or no? Yes. Here you can say enterprise value equal to EBITDA. Enterprise value by EBITDA equal to 11. So then we will get enterprise value. Then if you multiply these two, you will, what we will get here? Anybody? Anybody? Nothing, sir. Simple. The question is, you need to understand carefully about it. Here simple. Equity by PE ratio given 17.6. Okay. How do we get this? How we get this? By taking the average of everything. By taking the average of everything. EPS already given the question. So no need to calculate any equity and all. Okay. Not required. Clear? Okay. Now don't think like that. So for this EBA DTA given, sales also given. So directly we can calculate enterprise value. There is no preferential capital, no need to reduce. Debt is given. So 500. We got 662, 875. Number of shares also given. We got this value. Market value per share. Nothing but we can also call it as here. What is that? Deal price. Because we have taken expected values, it includes the rate also. So deal price minus what is that pre-merger value? How much? 11. So 13.24 minus 11 divided by 11. 17.5 minus 11 divided by 11. 15.84 minus 11 divided by 11. You will get this percentage. Premium. That's it. I think nothing too difficult. Nothing. Don't get panic about this question. Okay. When you see, you may not get a doubt. What are the special points I am going to discuss? So first of all, you need to take the average value. The question itself said that average values. You need to take average. Clear? Everyone. Average. Students may got some confusion about this last column only. Okay. Don't get confused. That is the second point. Here we got enterprise value, and then immediately we can reduce the preferential capital as well as debt also. Then we will get equity value. Correct or not? Yes or no? Even if we multiply this, see here. Students, again, I want to clarify the last point. This we got, right? equity equal to P. I don't know P actually exactly. Correct or not? Yes or no? Yes. I want the equity value. Okay now. Clear? If you see the question, please use your calci just once. Some students may got doubt. Sir, use this formula. Use this formula. You may get, so like the doubts you get, because the question is given, everything is about per share only here. Here per share only. Here we got enterprise value. Then we will get enterprise value per share only. Okay. Suppose example. Okay. See, everything is about enterprise value. So we are not asking about per share because we want the full value. So it is not possible in the last case. So directly we can take it. So we can treat it as a P average P. So directly we will get this market price per share or intrinsic value or acquisition price or deal price. So and then premium. Okay now this level is already given in the question. No need to worry about it. Okay now. So remember this question. Thank you. We'll discuss next question. Okay guys, we are done with question number 2, right? I think everyone understood this question. Okay, nothing feel difficult, nothing difficult in this question. Okay now. Okay, don't confuse about the deal price and all. Okay, are you getting my point? Actually, you have find out the expected values, right? Okay. So here value per share I have written as a deal price, which means assume the deal price means intrinsic value plus that one acquisition premium percentage generally. Correct or not? Generally, acquisition premium we need to take, right? Correct or not? So we can assume it's a deal price. Assume that it's a deal price because we need to calculate the acquisition premium by using that only. That only. Correct or correct or not? Acquisition premium formula. What is the formula? Deal price minus pre-acquisition. Sorry, pre-matched target price. Correct or not? Yes, that's it. So come to next very important exchange ratio. We need to know about exchange ratio or a swap ratio. We can also call it as a swap ratio. Simple sir. Suppose example A limited company acquiring a B limited company. Okay now A limited acquiring B limited company. A limited is known as, this is the acquirer. This is the target. This is the acquirer. This is the target. Okay. So simple. Suppose example target company have 1 lakh equity shares. We have 2 lakh equity shares. So acquirer company saying that for every 4 shares or for every 2 shares, I will give 1 share. So A limited saying like that. For every 2 shares, A limited will give 1 share, which means for every 1 lakh, for total 1 lakh shares, how many shares need to be given by the A limited to B limited? B limited have 1 lakh shares. So how many shares we need to give? 50,000. So we can call the ratio as 2 is to, sorry, 1 is to 2. 1 is to 2. If the swap ratio is 1 is to 2, means for every 2 shares in a target company, acquirer company need to issue 1 share. That's the meaning of it. Please remind this. Please don't get confused about this reading. Understand is very important. Understanding is very important. For every 2 shares, 1 share needs to be issued by the acquirer company. That's it. 1 is to 2. 2 is to 1 means for every 1 share we need to issue 2 shares. That's it. Clear? See here. I'm giving you an example here, simple example. Particulars A limited, B limited. Earnings given, earnings given 4 lakhs. Number of shares 2 lakhs. EPS how much? 4 lakhs by 2 lakhs. How much? 2 rupees. Here 1 lakh by 1 lakh 1 rupee. That is the EPS. MPS is given in the question 125. Assume that market price is 125. So A limited wants, this is the case 1. A limited wants to acquire B limited. Exchange ratio is 0.4 is to 1. Which means, anybody? For every 1 share we need to issue 0.4 shares. For every 10 shares we need to issue 4 shares. For every 100 shares we need to issue 40 shares. Correct or not? So, B limited how many shares have? 1 lakh. How many shares we need to issue? For every 1 share 0.4 shares, nothing but for 1 lakh shares we need to issue 40,000 shares. Correct or not? So we have already 2 lakh shares. Again we are issuing a 40,000. Total 2 lakh 40,000 shares. 2 lakh 40,000 shares. Correct or not? For every 1 share in B limited, A limited will issue 0.4 shares. Calculate pre and post merger EPS. Pre-merger EPS how much here? Already given 100 rupees is pre-merger EPS. After merger how much? How do we get this market price? Market price per share. How sir? This is in this question it was already given. Generally market price per share formula. Market capitalization by number of shares. Correct or? Yes or no? Yes. See. See now I want to calculate the pre and post measure. So I know about the pre, I want to calculate the post. See here simple example. Number of shares issued by A limited to B limited, how many shares? 40,000 shares. Everyone knows about it. Total number of shares becomes after merger. Already A limited have a 2 lakh shares. Now they are issuing to B limited how many? 40,000. How much? 40,000. Total 2 lakh 40,000 shares after merger. So total number of shares after merger how much? 2 lakh 40. Now I want a post merger EPS. How to calculate post merger EPS? Simple sir, market value, market capitalization. Number of shares how much in first case? 2 lakhs. 2 lakhs into 100 how much? 20 lakhs. Sorry, 200 lakhs. Next here, how many shares? Total value. 1 lakh into 25. So total 1 lakh into 25. Total how much? 20 lakhs plus 25 lakhs. So 200 plus 25 lakhs. 225 lakhs. Divided by 2 lakh 40,000. We will get a 93.7. This is the way of post merger MPS calculation. Post merger MPS means after merger. Okay, both the market price will get combined. So our market price is 2 lakhs shares into 100 rupees. Their market price is 1 lakh shares into 25 rupees. Total divided by number of shares. Total number of shares after merger how much? 2 lakh 40. We will get this. Previously 100. Now 93.7. Clear? Any doubts? Anybody, please? Before merger, after merger. Simple. Before merger, 100 rupees are directly given. After merger, what is the formula? What is the calculation? Simple. Market capitalizations are market value. Number of shares into market price per share. Number of shares 2 lakhs into 100. 1 lakh shares already have 25 rupees per market per share by 2 lakh 40. Our total number of shares is 2 lakh 40. It is in the books of acquirer, sir. Acquirer after merger I am talking about. I am talking about acquired after merger. How much? 93 point. How much? 93.75. That's it. Anybody have doubts? 1:4 means swap ratio 1:4 means for every 4 shares in a target company we need to issue 1 share. So for example 1 lakh shares in target company. How many shares we need to issue? 1 lakh divided by 4. How much? For every 4 shares we are giving 1 share. Nothing but 25,000 shares. Correct or not? Yes. So simple. Note point. Everyone note this. When pre and post merger MPS will remain the same, then exchange ratio equal to MPS by EMPS. Sorry, MPS of acquirer by target by MPS of acquirer. What is this? In the given question, when pre and post merger MPS market price per share will remains same, then will remains same. So if the question says the post and pre merger MPS will remains the same, then exchange ratio how much it will be? Market price per share by market price per share. That's nothing but target by acquirer. Target by acquirer. Target market price 25. Here 100. Total 0.25. That's it. Number of shares to be issued how much, sir? 25,000. Because they will have 1 lakh shares. Here out of 1 lakh 25% means 25,000. That's it. Post merger EPS 2 lakhs into 100 plus 1 lakh into 25 divided by total number of shares value will get changed because what is the reason, sir? Here number of the shares to be issued only 25,000 only here. 25,000. Previously I have 2 lakhs. Now we are issuing 25,000. Total 2 lakh 25,000. 100 rupees is the post merger MPS. Clear? Everyone? Any difficulty in this question? Just exchange ratio basics are basic. Note 2. Calculation of exchange ratio when pre and post merger EPS will remain the same. If the question says EPS pre and post will remain the same, it has to be same. Okay, then the exchange ratio would be 1:2. The exchange ratio would be 1:2. Are you getting my point? Pre and post MPS will be remain same. MPS of target by MPS of acquirer. EPS will remain same. Simple. What is that, sir? 1:2. That's it. Okay, I'm going to discuss about this. Question number 3. Okay. Come to question number 3. Directly I'm yeah, it is related to share exchange ratio only. Read the question. ACE Limited is considering the acquisition of a base limited. Management estimates that the acquisition will create a synergy worth 110 millions. So it was creating synergy benefit how much? 110 millions. So I think everyone knows about that synergy and all. Please remember once again. Synergy. Okay. Tell me generally what is the synergy value? What is the synergy value? Anybody? Generally 1 plus 1 equal to 2, right? 1 plus 1 more than 2. Then we can call it as the synergy benefit. We need to get some benefit from them, sir. Otherwise, how can we acquire that particular company? Correct or not? Yes. So something we should have some benefit. Then only we will acquire. Otherwise, we will not acquire, right? So once again repeat all the formulas. Otherwise, you cannot do all these things. So this is the starting, right? Okay. So synergy means value creation. Acquisition create value when cash flows of combined companies are greater than the sum of their individual values. If you total the individual values, it must be okay. The cash flows getting from combined companies is more than the individual values. That is nothing but synergy benefit. Correct or not? Yes. So we have seen this value of synergy benefit. How to calculate here? 50 lakhs is the increased amount. That is the synergy amount divided by 10%. That is nothing but this is the value of synergy benefit. Okay, so we are done with all these things. Synergy value here, see here. Benefit to acquirer company is nothing but synergy value minus acquisition premium. Benefit to target company. B limited means target here. What is the form? What is it? I already discussed about it. What is that? Sir, benefit to target company shareholders. Actually, their market price is 1 lakh. We are paying 1 lakh 20,000 because of the synergy benefit. Correct or not? Anybody, please tell me. Yes. Correct or not? Okay. Here in this case, synergy value is 500. Synergy value is 500. But the acquisition premium is 200. Acquisition premium is 200. The difference how much? 300 only. So we can also frame the formula like this. Benefit to acquirers company. Acquirers shareholders. Nothing but limited shareholders. We already discussed about this. Okay, no issue. Let's go to question number 3. Now, come to question. So synergy worth how much? Estimating 110 million, right? Value of the company. What is the first company? A is limited, B is limited. Okay. Value of the company is given. Number of shares given, value per share also given. Okay. The management of A is limited evaluating 3 options for base limited. 3 options for base limited. What is the first option? Cash offer 17 rupees per share. So A limited offered. Who is acquirer here? Who is acquirer? A is limited is considering the acquisition of B limited. So A limited is the S limited is the acquirer. Base limited is the acquirer. So they are acquiring. Acquirer, who is the acquirer here? A limited. So they are offering 17 rupees per share cash offer. Whatever the number of shares in the base limited, A limited need to issue 17 rupees per each share. That's it. Clear? So that's the basic option. Easily we can. What is the number of shares in base limited? 35. Each share 17 rupees. Correct or not? So total how much? Offer share price 17 rupees. Number of shares 35. Consideration how much? 595 million. That is the consideration paid. Actually, what is the value of the particular company? 525 is the value of the company. We are paying a 595. The difference is nothing but what is that? Acquisition premium. Acquisition premium. Okay. Correct or not? Yes. How much? 70 millions. Clear? This is acquisition premium. This is the benefit to target company basically. But then what is acquirers gain? What is from the synergy value minus acquirers acquisition premium. Synergy value minus acquisition premium. Synergy value given in the question how much? 110. Acquisition premium how much? 70. Difference 40. That is the acquirers gain. Simple, sir. If you don't know the logics, sir, there is no need to remember the formulas also. Simple, use your common sense. You are the target company. I am the acquirer company. Okay, your value is 1 lakh. I am paying 1 lakh 20. Why I am paying that 20 is nothing but acquisition premium. Definitely I will get some synergy benefit with when I join with your company. Definitely I will get some synergy benefit. That value will be given in the question. Okay, my benefit is suppose example 20,000 is the benefit synergy value. So 20,000 not 50,000 is the benefit. But I am paying some 20,000 extra to your company, right? That is acquisition premium. So that is a benefit. So I need to set up the payment acquisition premium. Then only I will get net benefit. Synergy, suppose example, see here. I will explain with example. A limited acquirer, B limited acquiring. The value of the company is 1 lakh. I am paying 1 lakh 20,000. 1 lakh 20,000. Okay, I am getting a synergy benefit is 50,000. Okay, generally the company value is only 1 lakh. I'm paying 20,000 extra. That 20,000 is a extra amount, right? So we need to reduce from the synergy benefit because it is not. We need to reduce that because we want net benefit. What the net benefit here? 30,000. That 30,000 is nothing but acquirers gain. That 30,000 is nothing but acquirers gain. Okay, now that's the question. Option number 1. Next, share exchange ratio of 0.7 shares of A Limited against each shares of a B Limited, which base limited, which means for every one share, A Limited need to issue 0.7 shares. How many shares here? 35 lakhs or millions. So we are giving 0.7. So 35 into 0.7, how much? Please calculate. How much, sir? 24.5. Correct or not? Yes. See, number of shares, sir. Okay. Need to be sure to B Limited, how much base limited? Number of shares issued to base limited, how many? How much? 24.5. Okay, now are you getting my point? Next, what is the question? The question is asking about your required to evaluate the option that which best is suit A cylinder one of the most. Okay, which is the best they are asking, right? Correct? Yes. So we need to calculate for every option acquirers gain and acquisition premium. If you don't know the acquisition premium, then acquirers gain we cannot be calculated. Based on the acquirers gain only, we can say it's a which is the best option. Correct or not? So for example, out of the three options, okay, see here the question will best suit ES Limited. They are asking about which is best to ES Limited. ES Limited means acquirer. ES Limited means acquirer, which is the best option to acquire a company. Then what is the how can we find out that benefits are benefit? Under which option they are getting a more benefit? That's the option they will choose. Correct or not? Yes. That's the option they are going to choose. Clear? So come to option 2. Exchange ratio 0.7, number of shares issued to base limit 24.5. Value of a combined entity. We already discussed about this. What is the value of combined entity? I'm combining both the companies. So my company value, pre-merger value. Your company value. And also, what is it, sir? Any synergy benefit I am getting, so that also should be added. Any cancellation I am paying, that should be minus. Correct? That is only the formula we already discussed. Yes, pre-merger value of acquirer plus pre-merger value of target plus expected synergy value minus cash paid. The given question, they are not paying any cash, they are issuing only shares. So that's why we need to take a pre-merger value of a merger acquirer means, which means what is that? Acquirer's market price. Previously how much? $19.20. Here $5.25. Consideration paying how much? Cash paid nothing, zero na. Only shares we are issuing. Okay. Synergy benefit how much? 110 is given in the question. That's it. There is no cash paid. There is no cash payment in the given option. So 2,555 million. That is the combined entity. So I will take a value per share combinedly generally. So for that I need total number of shares after combined. Previously how many shares in A Limited? AS Limited 80. Directly we can add this 35. No, AS Limited issuing 24.5 million shares to Base Limited. Base Limited, that's nothing but 80 plus 24.5. How much? 104 point. That's the number of shares. Okay, now you can calculate the acquisition premium. Then we will find out acquirer's gain. Acquisition premium means anybody? Value paid to target, that is nothing but deal price. Correct or not? How many shares we are giving here? 24.5. 24.5. Correct or not? Okay. Simple, sir. Acquisition premium equal to, generally what is that, deal price. We will take a deal price minus a pre-merger value for target. So we already know about the pre-merger value for target. Okay, so now value paying to the target is nothing but deal price, we can say that. Okay now, so here after merger, what are the number of shares they are going to issue? 24.5 millions after merger. So after merger, what is the price, market price per share? How much? Value of the combined entity 25555. So MPS equal to how much? 25555 divided by 104 million shares. Then you will get 24.4. Correct or not? Yes. So that is the value here. So 24.5 into 24.4. 24.5 shares, the million shares into 24.4. That's it. You will get a 598. So balance 73. How much difference? 7. That is the acquisition premium. Acquirers gain, how we will get their synergy benefit? 110. So acquisition premium 73. Then you will get a 37 is the acquirers gain. So every option you need to calculate the acquisition premium and acquirers gain. Without knowing the acquisition premium, we cannot calculate the acquirers gain, because we know synergy value 110. We want acquisition premium. How we will get this? How we will get that acquisition premium is the point in this question. That's it. Are you getting my point? In question option 1, what you have taken here, consideration paid by the acquirer company. How much they are paying here? 595 they are paying. This one. In second option, you need to calculate. You are giving only shares, so you need to calculate the share price after merger. How much was the share price after merger? 24.4. After merger, you are giving a number of shares. How many shares? 24.5 million shares. So then what is the consideration you are paying? Nothing but what is the consideration you are giving in the form of shares? 24.5 into 24.4. That's it. Minus 525 is given already in the question. We got this one. Acquires gain, simple. And third point, share exchange ratio 0.5 shares against each share of a base plus 5 rupees per share extra. They are giving a consideration 5 rupees and also shares. Both they are giving two options. I mean two choices here. Benefit one plus one. One they are giving shares and another cash also giving 5 rupees per share. Correcta? Clarity asunda? Ma clarity, are you getting clarity? See, acquirers paying cash and shares cash paid. First, acquirers paying cash and shares. Third case, acquirer paying cash as well as shares also. What the cash they are paying 5 rupees per share. How many shares in that particular company? B Limited, Waste Limited, 35 million. So 35 into 5 rupees. How much? 175 million. Sorry, 175 million. That's it. Next, how many shares are issuing by the acquirer? How many shares are issued by the acquirer? 0.5 shares for every one share. How many shares in that company? 35 million. So 35 millions into 0.5, 17.25 shares. 17.5. Sorry, 17.5 shares. So 17.5 million shares. This is the shares issued by the acquirer. They are giving 175 as well as this one also. Now, how to calculate combined entity value? Pre-merger market value of acquirer plus pre-merger market value of acquiring target plus next synergy benefit minus consideration paid. Same like second point, cash paid. In second case, there is no cash payment. In third case, we have a cash payment of rupees 175 million. So minus 170, we will get 2380. That's it. So now you can calculate the number of shares. How much? Already Ace Limited have already 80 plus they are issuing how many shares? How many shares? 17.5 total. Total how much, sir? 80 plus 17.5 shares, how much? 97.5 million shares. So then we will calculate 2380 by 97.5. Correct or not? Yes. See, value paid, deal price, nothing but value paid minus pre-merger value for target. Target is 525, we already know about it. So I want this value paid. They are paying a cash paid 175 plus per share value 24.4. How many shares? 17.5. So 17.5 into 24.4. Total we will get 6 not. Correct? Please calculate once again. 2380 by 97.5. 24.5, same. 24.4, yes. So 24.4 into 17.5, you will get this value. Total 6 months. 0.2 something. So minus this value, you will get 77 acquisition premium. So acquired gain easily you can calculate. Correct or not? 110 minus 77.33. That's it. So we have 3 options: cash option, stock option, mix option. In cash option, premium 70, premium 73, premium 77. Gain, acquirer's gain. Acquisition premium 40, 37, 33. Which is benefit? Which is benefit to acquirer? Which is benefit to acquiree? For acquirer, they are getting benefit, more benefit 40. So this is the acquirer's preference. And also premium is 70 only. Less amount, less premium. Here, in case of a target company, they want more acquisition premium, less acquirer's gain. So more acquisition premium, less acquirer's gain. That is benefit to target preference shareholders. That's the conclusion. So please think in acquirer's point of view. Acquirer's premium should be more or less. It should be less, sir. It should be less. Premium paid by the acquirer. So it must be low. So this one. Acquirer's gain must be more. Correct or not? So how much? 40. So first acquirer's preference. In acquiree point of view, reverse. Premium must be more, gain must be less. Acquirer's gain must be less. So which is the option? Any difficulty in this question? Is there any difficulty? Nothing difficult, sir. Clear? Okay. So, next video we are going to discuss illustration 4. I will give some exam homework also. 5 also will discuss. Okay.